Good morning, everybody. Happy Monday. It's March 16th, 2023. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. We bring you these every Monday and Thursday morning. It's a big week. Obviously, we have the Fed meeting, which starts tomorrow. It will conclude on Wednesday with a policy decision, and more than likely, they're going to leave interest rates on hold. Let's take a look at that for just a second here. Let me show you this before we show you the markets. 99.1% chance that the Fed will leave interest rates where they are at 3.5% following the meeting that starts tomorrow and concludes on Wednesday. We'll hear Chair Powell talk a little bit about the decision that was arrived at on Wednesday in a press conference after the meeting is over at about 2:30 Eastern time. We see about a 1% chance, just under a 1% chance that the Fed is going to cut rates here. And then if we look out a few more meetings, let's look out to September, for instance, it's about a 50-50 chance of a cut in September, slightly leaning towards the cut side, about 51.8%. 48%, but then if we go out to December, it's much more definitive. It's about a 70% chance of a rate cut. And this is following a strong down day on Friday, and also which followed up a strong down day on Thursday. And you can see the prior day before it was at about 40%, 40.3, 16% chance of a rate cut. Now it's a 21% chance, 22% chance, down to 3%. Down to a couple of rate cuts. So it's possible. It looks pretty strong that the Fed's projections from the last projection meeting, SEP meeting, excuse me, in December is right on target with where the market is at. The market is looking at one rate cut. The Fed came out and said that they were expecting one rate cut based on their economic projections. Now, of course, after this meeting concludes on Wednesday, we'll have a summary of economic projections as well from the Fed with expectations for where they think Fed funds is going to be. Also, unemployment, and along with inflation and GDP growth. So those four components will be updated from their December meeting. Also, we do have some important economic data coming out as well too. Let's take a look at that. Empire State coming out right now, industrial production and capitalization right before the market opens today. Pending home sales, more home data coming out, producer prices coming out for February, important number here for inflation coming out Wednesday morning, and that will be before the Fed decision comes out. We'll also have jobless claims on Thursday, new home sales, wholesale inventories, Philly Fed, and then nothing on Friday. Tomorrow is St. Patrick's Day, and of course, you know, if you know me very well, I'm a big basketball fan. College basketball season is this is where it really happens. March Madness starts this week. We have some playing games this week, and Thursday, Friday, Saturday, Sunday, I will be absorbed in all the college basketball games that are going to be going on. This first weekend is always my favorite because there's so many games and so much to watch and so much excitement and enthusiasm. So we also, if you're in the chat room, we have a Bob Lang EO chat room challenge. So if you want to get in on that, let me know. Send me a message on the side, or else text me, or if you're in the chat room, send me a DM, and we can get you a link to sign up for that. Of course, brackets will be have to be put in by Wednesday. That's when the first game starts on Thursday. So it should be a real fun tournament. A lot of good basketball coming out. Unfortunately, my San Diego State Aztecs got left out of the party. They're going to be going to the NITs, I believe, but unfortunately, they were on the bubble. Nobody else to blame but themselves, of course, that they made it to the finals of the Mountain West Conference tournament on Saturday and lost to Utah State, but had a good run there, good year, and had a really good run into the NCAA tournaments. And of course, 2 years ago they went to the finals against Connecticut and had a great 3 years ago now, and had a great finish, great run that year. So Um, let's see here. What else do we want to cover here? I want to show you a couple of charts here. Take a look at the, well, first of all, futures, right? Why did we play that song this morning? Futures are jumping today, right? Up 60 handles on the S&P futures, getting a nice rally. We did see overnight that the futures did roll to the June month strike for the ES futures. We'll have the volatility futures also finishing up for March. Tomorrow they will roll on Wednesday morning to the April. And we know that the curve is still inverted here right now. See, the VIX cash is above the VIX futures. They have to kind of come together, which is why we're seeing such a large differential today. They have to come together by the close of business tomorrow. They're getting a lot closer now. They're only about 27 cents apart. We'll see that get together and crunch together. Don't forget also Friday's a big day. Friday is options expiration day in a big way, triple witching. We have quite a few options that are going to be expiring, just not the monthly options. We also have the index futures and the futures options on futures. So index options as well. So a lot of stuff happening this week. On the earnings front, we'll hear from Lululemon this week, along with FedEx. We'll also hear from Accenture, Alibaba, General Mills. Other names like DocuSign and Oklo will come out. Macy's is coming out. J-Bill circuits will come out Wednesday morning before the market opens. After last week's debacle here, we had a really tough week last week. It seems that the markets got real oversold, and we're looking for a little bit of a rally attempt, right? So let's take a look at the S&P 500 chart for a second. Right near the 200-day moving average here, right? So we're not gonna get a test of that 200-day moving average here just yet. We're gonna bounce this morning, but of course last week Friday was a miserable day. Miserable day. Look at that candle. We started up down here, went all the way up there, plus 50 handles, and we ended up down something like 90 handles. So it was a really, really difficult day for the bulls. Of course, that's coming off of a bad day on Thursday, but we did get to some deep oversold readings. Let's take a look at those for a second. When you take a look at the McClellan oscillators, the NASDAQ down to minus 245, the New York Stock Exchange minus 235, and those are not to the most ridiculously low levels, but they're pretty low levels. And I did say last week that if we do get down into the minus 200s, there's going to be a nice whopper of a rally that happens within a couple of days. Maybe today is it. Maybe today's the day, right? What will I be doing today? I'll be sitting back and watching and observing right now. I'm not going to likely get involved in the markets to a large extent. I do have some calls on, some stuff that's going to be doing well. I do have some puts on that aren't going to do very well today, but I always have a good mix of stuff in there in the portfolios. But for the most part, this first day is not one that you really want to get too involved in right now, right? Unless there's some news that's driving futures to go absolutely bananas. I don't see that just yet. There could be some positive news coming from the Iran war that we don't know yet that could be coming out. But this first day bounce is not likely to be a good opportunity for you to get involved in, or at least for me. And I'm going to step back and wait. I like a confirmation day. I like a day where the markets actually trust the first move that happens. So if today's that first move, I want to see that follow-on move tomorrow or on Wednesday, and then I'll be looking for some opportunities to get involved. But more than likely, what's going to happen is that we'll have a few up days in a row if the volume starts petering out and conviction is just not there. It's going to create what's called a bear flag, and bear flags are generally sold when that rally attempt is completed, right? And sold, and will most definitely come back down and test those lows from Friday, and possibly even lower than that. So it's good to step back and wait a little bit. Sometimes discipline trumps conviction, even if you're feeling like you got to get in there and start doing some buying today. If you do, fine, do it in a small way. If you don't have to, if you're like me and you want to step back and wait and watch what's going on and look for opportunities when they pop up down the road, that's also a really good characteristic too. That's a really good way to go. So, listen, the markets have been difficult to trade this year. They're going to be trading. They're going to be difficult all year long. But if you just stay in control of what you're doing, stay in your lane, go with what works for you. I think you're going to be fine. Again, there's going to be some opportunities in a lot of different areas over the coming months. We're only 2.5 months into 2026. Lots and lots of time left to go. 9.5 months to go before the end of the year, and with lots of trading and lots of chances to make money up and down the market. So that's going to be it, everyone. I appreciate everyone spending a little time. Oh, last thing I want to mention to you is it's going to be a great webinar coming out on Wednesday with me and Christian Fromhertz from TTG. So Tribeca Trading Group. So make sure you sign up for that. I put out an email. I put out quite a few links out on social media. It's also in the chat room. Sign up for that. Christian's a great guy. He's going to share a lot of his stuff with all of you, talking about a little bit about what he sees and how he sees it. He's very fair and looking at the markets and very complete. I really enjoy reading a lot of his stuff, and I think you'll enjoy listening to him. I have some good questions for him. And also, if you do have some questions for him as well, or myself, we'll hit some of those on Wednesday. That'll be after the close at about 4:30 p.m. Eastern time. We already have quite a few people signed up for this, so make sure you get yourself on board and listen to this. We will have it recorded, so if there's the day that you can't make it, that's fine. I'll have it recorded, and you'll be sent. As long as you sign up for the webinar, it'll be sent to your email address afterwards. All right. So again, thank you everyone for spending a little bit of time with me today. Trade well today. Take it slow. Take it easy. Keep some protection on. We don't know where things are going to go. Obviously, there's a nice strong bid in the market right now, but that could fade away later on today. So don't dismiss any selling that might not look serious. We had really strong breath at the start on Friday, and it turned negative to -16 to -16.10. So this is a crazy time in the markets right now. High yield, as I mentioned, as I was showing you earlier, high yield is starting to break down, which means spreads are starting to widen, and that generally means that economy is starting to slow down a little bit, possibly even to recessionary levels. So we did have a weak GDP number last week, so high alert for that. Okay. Again, have a great day. I appreciate all you spending a little time with me, and I will see you guys all on Thursday morning. Going to the Celtics game tonight against the Phoenix Suns, and go Celtics. Take care. Bye.